Good morning, Bookmap. Welcome, welcome. Hope everyone's doing good this morning. We got 33 people hanging out. Please smash that like button. Please say hello in the comments. Let's get the stream started. My apologies for running late this week. For those of you that don't know, my name is Charles. I run a community called Piratetraders. And I am here today on the Bookmap channel to talk to you about the ES, the NQ, and how it moves through the two-way auction process. So essentially, my whole thing is I look at the market every day as an intraday day trader, and I look for opportunities where the buyers or the sellers have taken control of the market, and I can try to trade with whatever momentum they have. Okay, so let's start off today by just taking a step back. We'll do what's called the top-down approach, and we'll try to give ourselves some insights as to what is going to happen today with the auction process. First and foremost, I just wanted to mention that Bookmap is running a discount, the Black Friday sale, all the way up until the 28th. So you have not missed your chance. You can still sign up and get that Black Friday discount, and I highly recommend it. It's the best sale you're going to get throughout the year, so if you've been thinking about trying Bookmap, you ought to check it out. All right, well, now let's switch on over. We'll take a look at the daily. We'll take a look at the daily chart and get some perspective. So first thing we do when we have a top-down approach is we start zoomed all the way out at the monthly chart. Looking at the monthly chart gives us an idea, bigger picture of what's happening with the market. Now, you might be thinking, Charles, I'm a day trader. What on earth do I need to look at a monthly chart for? Well, the monthly chart just gives you perspective. Sometimes our brains can connect with information in different ways. So you might see something on a monthly chart that you just don't see on a weekly or daily. So what am I seeing looking at the monthly chart? Well, it looks bullish to me. Right? The market was making a move to the upside. It spent some time. It pulled back and then it balanced off. And then we have now begun the process of breaking out of that balance. The market pushed higher. It came back down. It tested the breakout from that balance area and it turned around and it moved higher. So that is bullish to see. That's the first thing I'm seeing when I look at the monthly. The second thing is I'm noticing we are setting up for more balance on a monthly time frame in here, the same way we balanced for, a good year or so in this range right here. We are now setting ourselves up for the next large monthly balance area right now. Let's zoom in and take a look at the weekly. So once again, on the weekly, we see that the market had momentum to the downside. We had this trend line, which was acting as resistance. The market was able to work its way through that trend line, broke higher, came back down, back tested, and is now continuing to move higher. So again, on the weekly, we still have momentum. Okay? Last week made higher highs and higher lows on the weekly time frame. If we can keep that going this week, if we can get a high this week above last week's high, and we can keep our lows this week above last week's lows, we can assume the momentum is going to continue to head up and test these previous highs up here. However, if we make lower lows on the weekly time frame, that is a sign the market needs to pull back and balance on a longer time frame. And that could lead to a large pullback or just spending a lot of time inside this range. So we want to keep an eye on those lows on the weekly time frame. And then last, but most certainly not least, let's take a look at the daily. So same thing. We're seeing the exact same chart that we were just looking at on the monthly and on the weekly, just with a lot more detail. So what do we get from this? Well, now something new is jumping out at me, something I didn't see in those previous candles, which is the structure for this move to the upside. And what am I noticing? No sellers at all. From the moment it broke, okay? You had a massive candle of momentum to the upside. That left behind excess, okay? That left behind weakness that needed repair. But since then, the market has done nothing but balance up and to the right. It has created a channel on the day time frame, and it is balancing. So traditional TA-wise, that's bullish to see because we're building momentum to break higher. But I am thinking we are leaving a lot of weakness behind in here. So let's zoom in on the market profile chart and take a look at that weakness. So we've got the gap up from the 13th to the 14th. Okay, so this area here is weakness that needs to be balanced off. Okay, we've got the lows from the 15th. That is also weakness that needs to be balanced off. So my assumption this morning, I'm going to take Friday's range right here, the range from the 22nd, whatever day that was. I was on vacation, guys. Don't ask me to give specific days. Whatever day this was, right here, that's sort of my range for today. Okay, the overnight was respecting that range over the weekend and just barely poked lower to test it. So the question is that all the market needed? Are we ready to continue higher? So basically, as long as we are above that low, as long as we are above 45.55, I will remain bullish. As long as we're above the low, I'll assume the market is building up steam to keep going up. Why? Well, because look at that daily, right? Look at all those things we just looked at. The market has momentum. It can keep going. This momentum can keep going. There's no reason to assume it won't. So the sign for me that it's going to keep going is staying above that low. We could just call it the overnight low at 45.52, okay? If we push down there and we begin to get resistance, so if we push down below this low and we begin to get some resistance, we'd look to test the overnight low. If we get to the overnight low and we push below and get resistance, I then believe we need to start heading down and repairing some of this weakness. So resistance at this low here, resistance at the overnight low there, that is the sign that the market could give you this morning to tell you that the momentum up on the day time frame is over, right? That this, what we were just looking at, is not going to keep going. We are not just going to keep going higher and higher and higher like this. The sign for that is making that new low, okay? If that happens, the minute it happens, repairing all that weakness we left behind comes into play. Suddenly I'm asking myself, can this thing keep going or not? I don't know, but that's what I'm thinking. I'm thinking, can it go all the way back down to fill that gap? So I'm starting to monitor for continuation to the downside. I'm starting to ask myself, okay, we pushed below this low, we got resistance, we pushed below the overnight low, we're getting resistance. Where do I think the first stop for the market would be? Okay. So the first stop for the market would be to test the low from 1121 at 45.38. Okay. If it gets to there, so resistance, push lower. If it gets resistance there for continuation lower, the target becomes repairing these weak references at 45.06. Okay. Now maybe all that happens is it pulls down, it pokes the, those levels, and then it turns around and heads back up. Yay! It's bullish again. Or it pushes down there, it repairs those weak levels, and then it gets more resistance, more new selling. If that becomes the case, then I start to look for that gap fill. Can the market keep going? Okay, so to the downside, resistance at the overnight low to test the low from the 21st. Resistance at that low to test the weak references down here around 4,500. Resistance down there to test the gap fill. Okay? So this is what I call monitoring for continuation lower. If they get below that overnight low, that's all I'm asking myself. Do we have new sellers? Do we have resistance? Once I see it, I assume we're heading down to the next level. Once we get to that next level, I'm asking myself, do we get the resistance? Do I see it in the chart? If I'm seeing that we still have more sellers, I'm assuming we're heading for that next level. If we get to that next level, same thing again, same thing again. It's a really important concept to understand because so many people, if this were to happen today, will be thinking, gotta buy the dip, gotta buy the dip, gotta buy the dip, instead of watching the momentum lower to see how far they can push it. And you want to be the guy watching the momentum. Okay, great. Well, now let's say the market pushes down to that overnight low, but it doesn't get resistance there. Let's say the market pushes down there and it just comes right back up. Boop, boop. Well, then I'm going to assume that today will either be a sideways day where we'll just kind of bounce around inside the overnight range, or it's bullish for continuation higher. So resistance at the overnight low bearish, a look below and fail is neutral to bullish to see. Okay? If the market opens and it immediately heads straight above the overnight high, which is at around 45.69, that would be bullish to see. And I play the exact same game at the overnight high that I talked about at the overnight low. So if we can get to that overnight high and we can get new buying, we can get support up there at the top of that overnight high, I then look to target the high from the 22nd. Right there at 45.80. That one would be particularly bullish to see because we do have a previous gap above that still needs filling. So if the market were to work its way up to that overnight high and it were to bring in new buyers up there, I were to see support up there, I would assume it's heading to 45.80. Once it got to 45.80, new buying up there would be very bullish to head up and fill that gap. And then we would literally just do the exact same thing we talked about to the downside, but to the upside instead. So we'd be monitoring for continuation higher. Once we repair the first week reference at 45.90, is that all the market needs? Does it just poke up there and then come right back down? Or does it poke up there and find new buyers and get support up there? New buyers up there sends us to the next week reference at 46.05, then again up to 46.09, and so on and so forth. Okay, we monitor for continuation higher. Now, if either of those things gets to that level and fails, so if we have resistance at the overnight low that takes us to the low from the 21st, and it fails and pulls back up, or we get support at the overnight high, which takes us to the high from the 22nd, and it fails and comes back down, well, then we're just going to expect it to go sideways and give us rotation for the rest of the day. Okay? So to be bearish, I'll give you the whole thing again. For the people that are just joining the channel now, please smash that like button. Boo, 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 boo. And I'll give you the whole recap because it's quite simple. If the market opens and it pushes below the overnight low, we are looking for continuation lower. If the market pushes above the overnight high, we are looking for continuation higher. And if it fails and it can't do it in either scenario, we're looking for more sideways inside this range up here. As far as making a prediction now as to what I think the market is going to do, I have nothing for you. I will have to wait until the market opens. I will have to see how it reacts to this overnight range because to me, anything could happen this morning. It could go up, it could go down, it could go sideways all day. And we just got to use whatever it does and the information that gives us as an insight moving forward to look for trades. Okay? So let's zoom out here on the Bookmap and we'll try to give ourselves an idea of where is the liquidity in the market. Okay? Is there more liquidity above price or below price? And where are the important levels? Well, looking at it right now, I'm seeing that there is more liquidity below price than there is above. But I'm noticing something very interesting to me, which is this big node of liquidity right up here at 45.85. Whenever I see before the market opens on a day a random level like this that has just a massive amount of liquidity sitting on it, I know why that's there. I know what the market is trying to do. The market is trying to convince traders that they can go long and there will be liquidity waiting up there around 45.85. Okay? So think about it like a magnet that is tugging on price all day long. The market is just, everyone knows they could get up to 85 and there would be liquidity up there. But interestingly enough, if it disappears at some point in the day, particularly if it disappears right when a low is broken somewhere in the chart, that is a sign that this is just a giant spoof. And the minute it disappears, the market will likely start to pull back because that's the magnet that's keeping price up here. It's tugging and it's tugging and it's like, come on, come up to 35 or 85. Come test us. So as soon as it disappears, so does that magnet, and the market will likely pull back. But as long as it's there, it's worth keeping an eye on because that is the eventual target for the market, should they get that momentum to the upside. Very, very exciting. 1 minute to market open. Say good morning in the chat. Smash the like button. Share with your friends. Good morning to Tom Gunn. There you go. Market is open. Good morning to Mike, who thinks. Okay. Jay. Michael. Malak. He says possible false breakout for December with the resistance back into range. Yeah, that is very possible. I could easily see the market if we zoom back out on the daily time frame. I could easily see the market making one more push to the upside to test these highs in here. Okay, the 46.30 area. And then it comes crashing back down for all the weakness that it left behind, because that would be balance on the monthly, which we talked about. It would not be unreasonable for us to stay stuck in this range for a little bit. So if that were to happen, those previous highs are where the market would lose steam and turn around. But that doesn't mean it has to get up there first. So assume they can keep this momentum going. Assume they can keep pushing the market higher and higher. But yeah, as soon as it gives you a signal it's failing, it's got to pull back and repair some weakness. Okay, so right out the gate, the market pushed to the upside. It is trying to test the overnight high, but it has done so leaving behind what we call a weak low. So that basically means the momentum is up. They're trying to get up there and they're trying to test that overnight high at 45.69, but they will probably need to come back through the low once they do. So that increases the odds of a look above and fail at the overnight high. All right, so passing back through the opening price obviously increases the odds we're going to repair the week low. But it also tells us this market is set up for chop this morning. Okay, they created a weak reference. They made a move. They could not test the high in a when what should happens doesn't. They came back through the opening price. That tells us the market wants to go sideways for a little bit. So I'm now looking for support somewhere inside this overnight range to turn around and head right back up for the highs. Let's see what happens. Looking for support at 45.58 and 45.55. It's a chop zone. And they're chopping it up. Nora says, can we take a look at the Q? We absolutely can. Let's take a look at the NQ. Okay, so I would describe the NQ as being in the beginning of a balance area here. It feels like the momentum to the upside might be over for the Q. The reason I say that is because this has so much, this is like such a clean high right here. That's often what the excess at the high will look like before the market reverses back down. And so that tells me the highest probability, at least at this moment in my mind, is that we are heading from this large cumulative node back down to this large cumulative node. Oh, we did it in the overnight. So yeah, that is just less bullish to see, right? That the market made excess to the upside because that means it needs to get balance to the downside, So that's the first slightly less bullish thing to see. You also this morning had a look above and fail of the overnight range. So the market pushed up above that overnight high and it could not find support. It could not bring in new buyers up there. So that increases the odds that it's heading down to test the low, the overnight low. If they do that again, if they look below the overnight low and they fail, okay, great. Then we're going sideways for today. But if they look below that overnight low and they get new selling down there, well, that is bearish to see. And we start to monitor for continuation lower. The next stop would be this major cumulative node at 15,866. So test overnight low, new selling, head down to 66, look below and fail, go sideways the rest of the day. Let's see what happens. I will say on the NQ, this is not a good high right here. It's just very messy. And so that increases the odds of sideways for today, in my mind, more so than continuation lower. But of course, we just won't know until we test that overnight low. But I'm feeling sideways at the moment. Good morning to Alex, Bust a Move, SC, Dean, welcome. SC says, quick question. The high of 1121 is the same as the low of 1122, which is 45.54.75, assuming this is weak. Let me go take a look. Yes, and it's a poor low, actually. Good catch. Man, what a perfectly timed call, SC. Thank you, brother. So that poor low, being right there at 45.55, means that the low we just made is a weak low. So that just tells us more chop, more sideways. We can't trust this support. It's bots. It's computers buying here. Good morning to Nap. Welcome. Thank you, Ships. Appreciate you. Trader Ned in the house. Malenk is here. Sebastian says, good morning and good trading to all. I concur. Triple X says, thoughts on crude. I don't trade crude. I could look at it. I'll be totally honest with you. I would not want to be trading crude this morning. That is tricky. So essentially the way I see it, obviously you've got momentum down. You got this, whoops, that was a terrible drawing. You got this sort of channel to the downside happening here, right? That is bearish to see. But you're in a balance area right now over the last, week or whatever. And you're testing those balance area lows. So that could reverse and come right back up for all you know. You're also retesting previous support over here. So yeah, I'm sorry, I don't have a good trade for crude right now. I would say assume it's going to keep going lower until it makes a higher high. That's pretty much the best you got. So as long as the high today stays below yesterday's high, assume tomorrow it's going to keep going lower, and so on and so forth. And as soon as it makes a new high, look for a reversal because it's in balance. I can make a case for it heading up or down from here. Or tricky, tricky, tricky. Yeah. Sorry. Can't be of more help. Malek says, I got to join the academy. You're doing some very good analysis. I am actually teaching a course next week. If you head to marketsandmind.com, marketsandmind.com, you can sign up there. Starts next Wednesday. Okay, so as I said a few moments ago, normally right now I'd be saying, oh, look, we got support. Now we're going to head back up through the opening price and go test the high. But because that low is weak, because it's only got 23 contracts that traded at the low, which to us is considered low volume, and the fact that it stopped right at that previous low, right at that previous poor low, tells us this was just bots buying, and that the momentum they're building right now, the way it's making you feel like the market is going to go higher, that is just them trying to bring in new buyers here, because those buyers will put their stops just below the low. So the market will make a little move up and then come right back down for those stops. So I am seeing chop here and more sideways. Good morning to Grizzly Bull. Welcome, John. Sahil says, could you explain the difference between the big green box and the largest line? I get confused. Which one is the POC? Yeah, so the big green box that you see, that is either, if you're looking at the current time frame, that is the current price. So you can see right now it's a small green box because we only have one TPO. But that's just showing us where the current price is. Okay. When you see it in a previous day's range, so like from the overnight range, you can see that green box right there. That is just showing you where the closing price was for that overnight. Okay. And you'll also see this little green dot is showing us where the opening price was for today's profile. And you can see it's the same level, right? The green line that you see going across here, that is the point of control. Okay. It's where the letters change color. And on the regular trading hours, they'll be yellow, like that right there. So, of course, what he's talking about is what we call the point of control. The point of control is the level where within each profile, the market spent the most time. So I split out my profile. It's a little confusing looking at last week's because of, the vacation. But generally, the way it works is I've got the dark purple profile. That represents the day time frame, okay? And then the white one with the light blue, that represents the overnight. So where you see the letters are yellow on the regular trading hours, that was the POC for that day. And where you see it on the overnight, that was the POC for the overnight. The yellow represents where the POC was in that particular TPO, and the green is wherever it closed. So if we look, for example, here, and we zoom in, we can see in the A period, the POC was up here. It was down here in the B, C, and D periods. It was up here in the F, G, and H periods. And then for the rest of the day, it stayed right there, and that's where it closed. So that allows us to see how that point of control is changing throughout the day, how that fairest price to do business moves around. But we don't care about the POC right now. Too early. Right now, all we care about is the initial balance. That is, what is the market going to do for the first hour of the day? For the initial balance, as I discussed this morning, really all there is the overnight high and the overnight low. Do we get above it? Do we get below it? If we do we get new buyers or do we fail? Do we get new sellers or do we fail? Other than that, it's just chop, baby. They're just chopping it up. Arson says, what do I think about the NQ? I think it's in a chop zone. They're going to chop it up. Yeah, for sure. It's just chop right now. There's nothing to do with the Q. So basically, as long as they're below the overnight high, as long as they're below 16,023, the higher probability is that they're heading down to test the overnight low at 15,940. Okay? But if they push back above that overnight high and they find new buyers up there, well, then the momentum to the upside starts once again. And this was just a dip, right? But right now, it feels more likely to me that they would look above and fail again, and we would keep going sideways. Both markets feel like they need to chop. They're not ready to make any move right now, and it probably won't happen until after 10:30. But we'll wait and see. One step at a time. Thank you, Nor. Yeah, I haven't had a chance to log in this morning and fix that. I'll get to it as soon as this stream is over. Any other questions? We got 150 people hanging out. We're just going sideways. Let me know what you got. Any questions? Hit me in the chat. DNK says home sales in 10 minutes. Thank you for the heads up. For those of you that don't know, anyone that's new to the channel, I don't pay attention to data like that as a way to make decisions for trades, but I do like to know it's coming out, just so that if there's a little flurry of volatility that happens, I'll recognize it and not be confused. Okay, so they're coming back for this low. Will we repair the poor low, getting 1 point below it? Or do we just bounce once again, making it even weaker? Let's see what happens. Da 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 da, boop 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 boop. Do you see tilt? I'm not sure what you mean by that question. Can you phrase that differently? Do you mean tilt, the emotional reaction when people get upset and they overtrade? For those of you that don't know that, in poker, there's a term called going on tilt, which basically just means you get upset because you're losing. And because you get upset, you make bad decisions and then you lose more. And then because you get more upset, you make more bad decisions and you lose more. And that is something that happens to us as traders. We call it revenge trading. And in my opinion, it is one of the easiest things to fix. If you find that you revenge trade, just make a rule for yourself. Say, if I have 2 losing trades in a row or 3 losing trades in a row, I just stop for the day or I stop for an hour. Something as simple as that, as like, I take 3 losing trades in a row, I take an hour off. Could save you so much money in the long run. Give your brain time to slowly wean out all those fight or flight chemicals and get back to being calm and rational and thinking clearly, then come back to the market. That's how you avoid tilt. But obviously, I don't think that's happening right now. It's a two-sided market. Half the participants are buyers, half are sellers. We're just playing tug of war here. Where tilt will happen, where the emotion will happen, will be at the overnight high or the overnight low, right? When we get there or we get here, that's where people start to get emotional, right? Buyers who've been putting their stops at that overnight low get squeezed, okay? Anyone who's flat starts to feel like they should be getting short because they're seeing momentum to the downside. So that is a moment for the market to get emotional and make a move. Same exact thing up here. But as long as they're in the middle, nobody's really emotional. You could have been buying anywhere in today's range and still feel confident to be a buyer because we're above that overnight low. And same thing if you're a seller. So for now, I just see it as chop. Sideways. Speaking of which, they just made that low weaker. Twice they poked at it. And now they're doing it again. They're trying to convince you to go long right here. Look at that. It's a triple bottom. I got to have it. I got to buy it. But where are you putting your stop if you are buying right now? Right below that low. And you're just building liquidity down here. So the market will come back for that at some point. He says, no, I was talking about the percentage of buyers and sellers. Yeah, no, that's not something I look at. So if you look at this column right here, okay, that is showing the delta between buyers and sellers. So you can see at each price level, was there more buyers or sellers there? If it's a positive number, it was more buyers. If it's a negative number, it was more sellers. And then obviously the larger the number, the larger the imbalance one way or another. But to be totally honest with you, I don't really look at that at all. It's there. I'm aware of it, but I really pay more attention to momentum. So I pick specific areas where I think the market is going to do something, and I just wait and see what it does when it gets there. Are there buyers or sellers there? At that moment, I'll look at that delta and see what's happening. Bust a Move says, it seems like there's a lot of time spent at the lower end. Is that new business? No, sir. I mean, it is new business, right? They are convincing day traders right now, this morning, to go long. That's what they're doing. But the question is, who are those traders? Are these good, strong hand buyers? Are these long-term investors that are going to hold this for the market to make another 100-point move to the upside? Of course not. They're scalpers. They're day traders. And all it takes is one little poke at that low, and they all disappear. Poof. Every buyer that showed up so far today instantly disappears when we test that low. So, no, I don't see this really as anything important. Like I said, it's just tug of war. Just waiting for one side to give up. Any other questions? Okay, so we're seeing the liquidity is beginning to go dark here in the Bookmap. You see how instantly all these levels just disappeared at the exact same moment, right? Just turned off. And then the liquidity gets very dark inside the order book. That is preparing for that news release in 1 minute. So the regular bots are turned off, and now we are in news bot zone, which means they can make a move very, very quickly. We don't want to trust any move, even if they instantly poke higher or instantly poke lower. We don't want to trust it while the liquidity is thin, because we know it's just the news bots. Here we go. It's just the news bots, and it doesn't matter what they do. The market can turn around and go against them 2 seconds after it's over. So let's give them a second and let them play tug of war. DNK says if we get above the open, the shorts get scared, same as the longs at the low. No, not above the open. I would say you're going to have to get all the way above the overnight high. Arson says, do you like scalping the open for 30 seconds to 5 minutes? No, I do not. I do not take those trades. I do not take them. Sam, I am. I do not take them with green eggs and ham. Not at all. No, see, I used to trade like that. You know, like, oh, look, the market went, down 10 points and up 10 points and down 10 points. And I could have made money on that trade and that trade and that trade and that, But what I have found is trading like that is very, very difficult to do over a long period of time. You may have a great week. You may even have a great month, but good luck having a great year trading like that. When you start to expand the time frame of how much trading you do, taking those quick scalping trades, that high speed environment, it is exhausting on the brain. It'll wear you out, and it's just not something that I could do for the rest of my life. It just wasn't possible. I'd go crazy. So now what I do is I trade on a much slower time frame. So I'm looking for trades that I'll be sitting in for, a half an hour to a couple of hours, something like that. I'm trying to catch the bigger move the market is going to make. So as I said, there's one of 3 scenarios in my mind that's going to play out today. Scenario number 1, the market just goes nowhere. It tries to go higher, it can't. It tries to go lower, it can't, and we just kind of go sideways. That's a scenario of what could happen today. And by the way, right now, what is feeling like the most likely? The other scenario would be it pushes up and gets support, and then it heads much higher, or it pushes down and gets resistance, and it heads much lower, right? I want to play this game, right? I want to be this trader that's grabbing that bigger move the market's going to do throughout the day. And the reason is because it's much easier. I don't have to make a decision quickly. I have all this time to plan ahead. Where does the market have to go? What does it have to do to convince me to get long or get short, right? I can take a full hour, it looks like, at least, to think about it and kind of decide, where do I want to get in? What's going to be support and resistance levels? Where am I going to put my stop? Where am I going to take profits? How far do I think this thing can go? I don't have to make a decision like every 2 seconds. Oh my God, get in, get out, get in, get out. I can just relax and wait until the market comes to a level where I know what's happening, where I have an edge. Then once I get in that trade, the edge just becoming staying in the trade. As long as the market continues to head lower, as long as we are monitoring for continuation and we're getting signs of continuation, we just stay in the trade. And it will shock you how far they can push it. And you may end up making a lot of money that way, right? Whereas I know no matter what, if I'm taking a scalp trade, I'll be lucky to make a few points. So my gains are kind of limited. I have to take profits quickly. And I have to make my decision very quickly. And I have limited information to work with. Boy, that sounds like a really hard way to trade if you want to trade for years and years and years. To every day of your life do that. Whereas slowing it down a little bit and waiting for those bigger opportunities, that's manageable. You could do that every day and it's not overwhelming. Now you might miss some chances, right? It might be that I'm waiting and waiting for the market to get to the overnight high or the overnight low, and it finally gets there and I misread it. Maybe it comes down to the overnight low. It pokes down there and I think, oh, we're getting new sellers. Here's my chance. The market's going to go lower, and I get short. And then I put in my stop and then boop, it stops me out. Well, shit. Now I've got to wait and wait for my next opportunity. Man, I spent hours waiting for this chance and I got stopped out. Well, that's fine. I just accept that happens. That sometimes I'm super patient waiting for a setup and then the setup just doesn't work. And if you can accept that, then trading becomes so much easier. All right, so now that news bot is done, we can see the liquidity coming back to the market. You can see here where it went dark and it all disappeared. And you can see here it's starting to come back. So now we can start to trust support and resistance levels. Now we can start to say, okay, the real traders are back in business here. The news bot is done. So let's see what happens. So now I will be watching the half back and the opening price, which we're dancing right on top of right now, for potential support. If they can hold this level, I will assume they're heading up to test the high. If they come back through, I will assume they're heading down to test the low. Can they hold the halfback? Okay. Well, that support at the halfback is holding, so that increases the odds that we're going to test the overnight high up here at 45.69. But because we left that week low behind, I believe the higher probability is that we will get a look above and fail. So we'll poke above the overnight high, poke above 45.70, but then we won't find support and we'll just come crashing right back down. So I'll be looking to see, can we get that support or not? If not, I'll be assuming we're coming back through the opening price. Let's see what happens. Okay, so the halfback here at 45.62 held his support, excuse me, on the last test right in here. Okay, so now we assume it's going to hold the support once again. Man, I was really hoping to have more information than this before I ended this stream. I feel bad. All right, well, yeah, they're not giving us the bounce here. So I'm going to explain to you where I'm at and what I think is coming next. If you're not a regular to my channel, you might find this a little confusing because it'll sound like I'm saying the market's going to go up, it's going to go down, it's going to go up, it's going to go down, but just try to follow along. Okay. So right now we are in the initial balance, which means the market is playing tug of war. No one's in charge yet. The buyers are not in charge. The sellers are not in charge. They're both just competing right now. They're trying to see who's going to take charge of the market. Now, it appears to me the first attempt at making a move is going to be by the buyers. So I think the buyers are going to head up and test the overnight high around 45.70. Okay. We don't know yet what will happen when they get there. They could get there and instantly run out of steam and come pulling right back down. To me, that feels like that's what's going to happen. Okay. However, if that doesn't happen, if they poke up there to that overnight high and they do find new buyers up there, it will take me all of 2 seconds to change my mind and decide we've got buyers at the overnight high, we've got momentum, let's start monitoring for continuation to the upside. Okay? So right now it looks like they want to test that overnight high first. It looks like it'll fail. but anything could happen, right? Now, let's say I'm wrong, and let's say the market does not hold the support here at the halfback, okay? So the market comes back down and it passes back through before it tests that overnight high. Then I think we're looking to repair the low, and I think the same thing will happen there. So we'll poke below and come right back up. But just like I said with the high, if I see new selling down there, I become bearish for continuation lower. Okay, it will take me all of 2 seconds to change my mind and get bearish. However, right now, the higher probability is sideways. It feels like the market might just have one of those boring sideways rotational days. So the thing that will tell us if that's going to happen will be if it looks above the overnight high and fails or looks below the overnight low and fails. Support or resistance there means I'm wrong and the market's beginning momentum in that direction. So with that, I will say happy trading. I know that's not super helpful because we are still just stuck in the middle of the initial balance. We just don't have a lot of information to work with. But for now, I'm bullish to test the overnight high and we'll see what happens there. Thank you very, very much. As I mentioned earlier, next week, starting next Monday, I am teaching a live workshop. You can join us by going to marketsandmind.com. Marketsandmind.com. That interactive workshop is basically just you join a webinar via Zoom, and it's 4 hours a day from 11 a.m. to 3 p.m. for 2 weeks straight. So it starts next Monday. It goes for that week and then the following week after that. I teach everything that I use to be profitable as a trader, not just how to read a chart, not just how to know what the market is doing, but how to manage yourself as a trader. What are the things you should be doing with your life in order to improve your trading? How should you be analyzing your decision-making mechanisms to improve upon them so every day you get a little bit better? So absolutely, I teach the TA. I will teach you how to read market profile software. I will teach you how to read Bookmap, at least the way I do anyway. Obviously, Bookmap is very complex, but the way I use it, I'll teach you everything. And then, of course, the internals as well. I will teach you all the TA. But that is really only the first step. And it's the stuff that comes after that where you learn the process of developing a system, a process of improving over time. That's really where the magic exists. So you only get that if you take the workshop, and you've only got 1 more week to sign up. So head on over to marketsandmind.com. Thank you very much. And we will see you next Monday. If you're a member of the brigade, head on over to the private stream and I'll see you there. Thank you very much, guys. Have a good one. Bye.